Good morning, everybody. Welcome to Wednesday. I trust you're all doing well, trading well. Hope you've had a good couple of days so far this week. Morning, Kay.
Hey, good morning, Ryan. Good morning, everybody.
I'm just before we start, I'm just reading a headline that there's a vessel blocking the Rhine River in Germany. We've got a little bit of a mini Evergrande situation there by the looks of things. Obviously, the Rhine is a bit important for Germany for transporting goods, particularly coal to their power plants. Water levels have been, as we know, exceedingly low or exceptionally low. And now they've got a vessel blocking the river as well. So it never rains, but it pours over in Germany, as they say. A bit of an oxymoron there, given the weather. But anyway, let's crack on. Start with some of the overnight news and morning events. The RBNZ hiked rates as expected overnight. They're going to keep the pace of tightening as is. What they have done, though, is just nudge up their expectations for their terminal rate, or where they think rates are going to go to, slightly. So a higher level of rates coming for the Kiwi there out to the rest of the year, 2024, 2025. So they're just setting those expectations a bit higher, meaning they're going to be hiking potentially for a bit longer. There wasn't anything that I saw of great interest from the comments. The only thing that I picked out was that they say the neutral rate is the great unknown. So they don't know where rates are going to come back and settle to after they've supposedly fought off inflation, got to their terminal rate, and when they start bringing rates back down to a neutral level, they don't know where that neutral level is going to be. The rough rule of thumb amongst all central banks is anywhere roughly between 2 and 3%. So that's what most central banks will be aiming for with that, but for the moment they don't know. Over in China, the PBOC fixed the yuan rate up at 6.7863, round about 70 pips higher than it was yesterday. So far, the yuan, just take a quick look at it, and I'll go into this in more detail, has come off the highs that we saw from Monday, where it popped on the poor data and the rates. Got a couple of moves happening around about the same time, sort of late Asia, early European session. Two little dips we've seen here around about the same time in the early morning. So just something to keep an eye on. I don't know if there's any flows going through at that time. Certainly haven't seen any data that could do that, but that's 2 mornings on the trot we've seen these type of moves now. So something to keep an eye on. But as I say, I'll look at that in greater detail shortly. Elsewhere in China, again, excuse my pronunciation, the Jiangsu region is now also limiting power to manufacturing firms. We heard that from another region who had put restrictions in place between the 15th and 20th of August due to the drought, and now another region is pretty much doing the same. This is to protect energy to residential areas. Now that is obviously going to potentially play into activity in China. Also the ongoing supply chain problems that may limit goods leaving China, going out the production doors to elsewhere. So we've still got this supply chain issue running under the surface. Apparently, according to NHK, Japan and China are going to hold high-level talks. I haven't seen the details of that, what type of talks they're going to be, but they're going to be getting together for a chinwag. Catching up on some of the data overnight, or let's start with yesterday. So we got the main housing numbers starting off in the US, July data, and we got building permits and housing starts. Housing starts dropped by over 100,000 from last month, as you can see there. Building permits were softer. They beat expectations, but they were still softer on the month. So again, we're seeing the trend lower in these types of numbers in the housing market. As I've maintained, prices tipping over are going to be the final nail in this particular coffin. Then we got Canadian CPI, which was, I don't think you can draw many conclusions from it. Headline CPI dipped by 5 pips, came in as expected, but fell from the 8.1 prior. Now, of course, we've got the 30 other methods that Canada uses to try and measure inflation, all their core measures. So one of their core measures dipped by a pip, another one rose by a pip, another one dipped by a pip. So make of that what you will. The long and story short is that inflation is still high in Canada, however it's moving around. However, we did get Bank of Canada's Macklem speaking yesterday, and again, just to pick the choice comment, he said CPI was too high, but it may have peaked. So he's in the peak camp at the moment, not expecting to see any changes from the Bank of Canada on their rate path. But as I say, he thinks that inflation has peaked over there. Coming in looking at some of today's data. Let's get the calendar. Had some numbers out of Japan as well, which didn't look too bad. Depending on how you look at it. So machine orders on the year, a bit softer, but still a positive number. On the month, they were much higher than last month, which came in at -5.6. Didn't beat expectations, but still a positive number. On the trade balance stuff, slipping further into deficit there. But activity overall is still running pretty strong. Imports 47.2%, exports 19%. One of the things I look at when you look at trade data is whether there's activity at all. If you've got imports at 2% and exports at 1%, that's not a big number. So even though it says there's activity, it doesn't show there's a big number. So we have got some fairly decent numbers here, although they are year on year. So perhaps some virus skew still in that situation as well. But overall activity is still very strong. Obviously for Japan, a heavily importing country, that's going to obviously play on the inflation picture as well, because one of their big imports is energy. And as costs go higher and as currencies move, that's going to be a big pressure for inflation further out. Kay, just before I move on to the other stuff, I know you look at the trade balance stuff in Japan a lot. What are you making of those numbers?
Yeah, I think, as you say, in any other case, it would look not too bad regarding the activity, but it's July, summer kicking in, people upping the air conditioning. They have had like warm periods over there. I'd rather keep this time to the headline number, which is negative, and which de facto would weigh a little bit on the yen. And in addition to that, I've also seen that Japan government is installing a 33 yen or so per liter gasoline supply from tomorrow, actually. And again, I think the market understands that the government is doing a bit of Bank of Japan's job in a way, and it's still weighing on the yen. The activity, the core machinery went up from a deeply negative number, but we've seen and if you look just above there, the adjusted trade balance in Japan is going deeper and deeper into negative. So I still think it's not great for the Japanese and the yen situation right here and now. Still can't buy yen for longer than a couple of sessions, in my opinion, where we stand now. It's going to be one of the measurements for me for yen strength or weakness is to see that trade balance starting to reverse. Unfortunately, August is also a very, very hot month in Japan. I haven't heard from people on the ground that they were trying to limit the air conditioning use, so we might see an energy-driven, even deeper negative trade balance come August, but that we'll see later then.
So let me ask this, because obviously, despite being some big numbers there, 47% on inputs, on imports, 19 on exports. I assume that Japan trade data is the same as everyone else, i.e. it's yen based, so how much has been spent. So do you think that a lot of this trade balance deficit is purely price driven in terms of Japan having to pay up more for their imports? So it's almost like it's not negative on the fundamentals, but it's just a price issue, if you like.
There is the price issue, and then the second thing you have to look at is the balance between the exports and the imports, where they move to, and unfortunately right now the balance is still increasing, right? If you see the difference between imports and exports, going up a little bit, and but it's still increasing the gap, and also what we'll have to look at is to see, because they're still struggling with the supply issues. They are desperately trying to get their car manufacturing, big machinery. Japan is a big manufacturer of heavy machinery as well, like the Kubotas and all those. So we'll have to look at the balance as well between the exports and imports. But as you rightly say, it has to do with the price and the price of the yen. They have to pay not only higher prices in energy, but then a higher price compared to the yen. So.
Yeah, exactly. Cool. So just moving on to some of the rest of the data before we get stuck into the prices. Obviously, for the UK, a whole host of inflation numbers, the main inflation and the RPIs, PPIs, all the price components coming out. No shock to see inflation higher coming in, the core at 6.2% versus 5.8% expected, and beating the expectations there. Headline CPI hitting the double digits, coming in at 10.1% versus 9.8 expected, 9.4 prior. So obviously that's grabbing the headlines here in the UK, cost of living squeeze, so on and so forth, as if you read the press over here, it would read like we're the only country going through it. And of course it's all the government's fault. Now we've also got the PPI numbers as well, which obviously feeds into inflation. So one higher, one down. So the input prices year on year were a little bit off, and the output prices were a little bit higher over last month. Now, what the UK does here is they give two measures for PPI, the input prices and the output prices. And what I look at these for is almost like a business margin exercise. So, you've got firms who have input costs and then their selling prices. So the input cost is obviously what they're paying. The output is what they're selling at. It's not exactly like that, but that's the metric I use it for. So what I want to see in how inflation is going to filter through into some of the main numbers, the CPI numbers, is are the output prices matching the input prices? And as you can see, okay, there's a 5 pip difference between 17 and 22, but largely output prices are matching what firms are paying. So that tells me that firms are passing on a lot of the costs that they're paying for their whatever their materials, which then feeds into the CPI numbers further on, because that cost moves all the way down the line. So as those output prices stay high, it means that firms are maintaining their margins, so they're not allowing, or they're not holding on to the costs and not passing them on, which would be a squeeze on margins. They are passing the costs along, raising their prices as well. So it keeps their profit margins largely intact, if you like. But if we start to see that ratio change, perhaps where input prices are less than output prices, that's a good increase for margins. But it also may indicate that prices may start coming down, because if firms aren't paying more, they don't have to charge as much, but then we can see a greater profit margin if they don't reduce their output prices as much as input prices fall. So that's what I tend to look at, the data there from the PPI numbers. Other than that, we've had the market as it always does, some market traders, as the wires call them, they're pricing Bank of England rate to be at 3.5% by March 2023, so March next year. So they're keeping their expectations for the Bank of England rate hikes to keep on going. That's double where we are now at 1.75%. So if we're looking at 50 pip hikes, you know, we're looking at maybe 3 more of those and a little bit on top. But as we know, every central bank is in the same boat. They're all on the hiking path. I don't think the numbers push the Bank of England to a higher hike path. I don't think they'll start to put 75s on the table. They forecast, I think it was 11% inflation for this year. So we're well in the margin with that. Overall, for the pound, it hasn't been that much of a mover, really. Just another couple of bits of news. If you think you've had a bad day trading, Norway, the Norway Sovereign Fund lost 174 billion in trading in the first half of the year. So, you know, puts a bit of context into our trading there. 174 billion. Obviously, they're backed up by all their oil money. So it's probably just a drop in the ocean for them, but that's a big old stop loss overall. A couple of other bits of news, and something that's just picked up this morning. There's been a couple of smelters in Europe who have ceased production. The latest one being an aluminium smelter in Slovakia. They're going to stop production at the end of September. They're blaming energy costs, obviously making it expensive to produce their metals there. But also there's a complaint with the Slovakian government about receiving compensation for meeting EU carbon emission targets and that sort of thing. So it looks a bit more than just an energy cost thing. But what struck me is that this is the second one. There was a zinc smelter in the Netherlands who was also looking to shut down. I don't know the context of that story, but you know, we've got a bit of a theme going on here in the commodity space, particularly some of the key metals, alloy and zinc. And this is obviously coming at a time when commodities just of late are looking a little bit softer because of the fears in China, recession fears. You know, we're seeing it across the commodity space. This sort of thing where smelters close down is more of a positive for prices. So we've got a bit of a balance here between what the market is thinking generally for commodities in terms of negativity. You know, that's bad for prices if there's no demand there. But on the flip side, we get a few more of these smelters and maybe other producers cutting back production. That's going to be supportive of prices. So that's just something to keep in the back of your mind moving forward. Just quickly to look at what data we've got coming up today. I'll be keeping an eye as usual on the NBA numbers just to see what's going on there. We pretty much know what's happening in the housing market at the moment, so this would just be keeping an eye and seeing if there's any sort of trend changes. And then probably the bigger numbers is the retail sales from the US. So once again, we'll get to see how the US consumer is faring. As I mentioned on Monday, I'll make the point that when we get these numbers coming out, these headline numbers particularly, some in the market are looking at the adjusted numbers. These aren't adjusted for inflation, and there's various analysts out there who will pop up the adjusted numbers, if you like, afterwards. So although we've seen positive numbers for retail sales, I believe the last 2 months running, if you look at real sales, they've been down for the last 2 months. So that's something to keep an eye on. You know, the market will move initially on the headline numbers that we get printed, but then if you want what's really happening, just keep an eye out for those adjusted numbers after. We have got a Fed speaker, Bowman, not speaking on anything of note. I can tell you what she's speaking on: technology, innovation and financial services. And then she's out again later speaking on COVID and the role of women in the US economy. So nothing much really for monetary policy there. Obviously, a lot of governments are on summer recess, and it seems a lot of central bankers are off on their holidays as well, so that's why it's been fairly quiet on the comments, and I'm sure we're all grateful for that. Reminder that not this weekend, the weekend after, we have Jackson Hole, the Fed's symposium, where the central bank speakers roundabout will fire up again, or merry-go-round will fire up again, and we'll be getting floods and floods from them. It might be looked at in terms of Powell giving an intra-meeting message, a bit of an update on what's happened with the data since the last FOMC, because there is a big gap between last FOMC and the next one in September. Some in the market were thinking, have been talking about him potentially even acting, or the Fed acting in between meetings. I don't think we're in a position where they would need to do that. But as I say, the market probably next week is going to start getting a bit excitable about what Powell may say, whether he changes his tone as to what's happened in the data recently, or whatever he's going to say. So expect that to kick into gear next week, definitely. But just a reminder, stick that on a post-it note somewhere. Lastly, on the data front, we've got business inventories. Again, we've been looking at this just to see if we're going to be having issues with inventories. We've heard about stockpiling, and go back to the Targets and the Walmarts who said they're going to stop piling inventories because they're not being able to sell the goods. So this is where we'll see some of that effect either wash out. So if we start seeing inventories dropping, that shows a drawdown. That's a negative for activity, because it means firms aren't ordering as much goods, which means less goods are being produced potentially. So that's it from the data front. Kay, I don't know if you've got anything else you want to add to the news and data that we've had overnight.
No, you've pretty much said everything. The only just little article that I read this morning is that Japan's third largest bank, Mizuho, has now deposited a record amount of funds at the Bank of Japan at the minus 0.1%. And the article stressing again the difficulties that some of the banks, it used to be local banks, now even major banks, are going to have to, because the lending activity is not as it should be, so the difficulties that they may having as well. It's probably too early to think about it because the next BOJ meeting is only on the 22nd of September. It has been extremely quiet over there from the official fund side lately, because I think the diet is also on their break. So the ministers, even though they're still making a bit of decisions, as we have seen on stimulus plans and those interventions on the gasoline prices. But if the mega banks are starting to suffer from the overwhelming heavy deposits and having to place them at the Bank of Japan at negative rates, then we might start to see perhaps in September, going into the Bank of Japan, louder calls for again Kuroda revisiting his opinion. But as I say, it's probably a little early to think about it, but I found the article relatively interesting because we're not talking about regional banks anymore, but we are really talking about one of the four Japanese mega banks. And really, I haven't seen much. The only thing I wanted to say about retail sales is that, yes, they are not inflation adjusted, and people talk a lot about they should be inflation adjusted because then they end up negative. The thing is, it's not only in the States; it's everywhere. If you look at the inflation everywhere in the main countries, it's all running at 7, 8, 9, 10%. So it's back everybody at on the same wavelength. I think so. Whatever comes out, the headline is, in my opinion, still comparable to any other country's headlines.
Yeah, no, agree with that. Yeah, it's the same situation pretty much around the globe. But inflation does need to be looked at and taken into account with some of these data points. Some countries do adjust data for inflation and some don't. So it's just a question of finding out which ones. Just before we move on to looking at some of the charts, I just want to show you the screen now. We've got the Forex orders back up and running. They're there for premium subscribers. Our guy's been off on holiday himself, so the orders have been lacking of late, but they're back with a bang now. For those who aren't part of the Forex Analytics platform, these are market orders that are given first thing in the morning. Obviously, it's just a snapshot of that particular time, but what we can see at times, we know, or we get to hear whether the stops are sitting at certain levels, maybe when we get nearer some big levels. So these are produced usually every morning alongside the options, which you can see there, which come out every night. So if you want to grab that and get insight into that, that's on the platform, which you can join via the link I've just popped in the chat there. And if you come via Forex Flow, there's an exclusive 20% discount there for the lifetime of however long you subscribe. And also, just to give you a quick glimpse of the chat room for those that don't know, as we say, look at the news, some of the headlines that I've read out this morning. You know, the guys and girls keep this updated. We have a dedicated room for news and research. We can put bank research in there as we get it. Speeches, full speeches from central bankers, as you can see there from the Macklem speech there. Plus any other bits and pieces that we get in that we feel is of interest potentially to trading. So that's one of the rooms that we have on the platform. It's not just talk. We do put in some key items of news you may or may not have heard about. Right, so let's get stuck into the charts. I did start off with $1, so I'm going to continue there. So I'm short an average of around about 6.7950 something. I did sell a bit up near the top here. I did leave an overnight partial TP at 6.78, which was around about my first and lowest entry. I just wanted to, if I got an opportunity to take some off the table there, which I have done. The marker for me at the moment is this old line, sort of the high 6.78s, 7.9s, let's call it. We are waffling around this line at the moment. I was a bit happy to see it below this line when I came in this morning, and it was trying to hold below, but it's becoming a bit wishy-washy. So I'm probably going to use it as just an area 7.8, 7.9 on the wide, and just mark it as a zone. I'd like to see it back below. I'm not going to be slow in taking any profits. I've got a TP in at 76.50, but if we get down to 77.50, 77, I'm going to be looking to chop some more off my short and start bringing the stop right down. I don't think we're out the woods here. I'm not saying that this is heading all the way back down to the low 6.7s. I was purely starting by trading against this technical level, this high resistance area that have been going on for a while. We may well revisit the highs up here and push higher. For the moment, I'm in the trade. I know Kay's on the long side and he's looking to add some more. So maybe I'll pass the baton over to him when I'm getting out and he's getting in, and then he can ride it all the way up again. But perhaps we can see it go a little bit sideways. But as I say, certainly the push under, this push lower here was encouraging for me. But I want to see it hold below this line and potentially below 78, and then maybe I'll get a shove a bit lower. While it remains above here, it keeps this topside area back in play. You got any thoughts just on the short term on this one, Kay? As I know you're long and building a bit more.
I'll show the different. I think you were right in actually counter trading the short term spike, which was about 1.5%, which is pretty decent just for a 10 BP move from a central bank. But no, the idea for me is that China is really going to try to prop up their market and their economy despite virus closures and stuff. And I'm more like looking to continue to build up all the way down to 6.75 and then see what happens.
Yeah, I mean, this is the interesting part of trading. Two opposing opinions, if you like, but slightly different timelines. Kay's happy to look at it from a longer term. I'm just trying a short term, couple of day trade. I'll likely be out into the weekend, if not before, purely on the basis that we are expecting maybe on Monday or Sunday night Monday, the PBSC to cut rates again in some of their lending numbers. So just in case it's something big from there, I don't want to be short this one going into that weekend. So I may look to cut it if given a chance. And then Kay can take over and on his longer time frame, hopefully he makes a bunch of pips out of that. One of the I hope some of you guys and girls were up for the RBNZ, because it did exactly what we were speaking about yesterday. We got a little bit of a pop over the announcement, and then it went into complete reverse. The old buy rumour, sell fact, as we mentioned yesterday in the chat, and I was mentioning it with Gavin, that this is one of the strongest pairs for that, and it did exactly that. So I hope any of you up there who were awake for the RBNZ managed to grab that if you did. From here, this is a central bank who's just raised expectations for the path of rates, and here we are again with the price lower than it started off at. So it gives you an indication of how the market is pricing expectations. Just one of the other pairs to look at, I'm keeping an eye on, Euro Sterling. Again, as I mentioned yesterday, we are in a bit of a downtrend. I'm looking to see if that downtrend continues. We can take it back from June. Yesterday, we were holding just above this zone. Today, we moved through it down to a minor area, 83.80s. That's where support has come in. We're back chewing into this area again now. For me, the downtrend is still in play, and I'm looking to see if we get a test down here, 83.40. If we get a move down there and we break it, then we could be heading down to the low 83s, 82s, where I'm more inclined to try longs. I'm not really willing to get into the short camp, and I don't want to start getting back into longs in the middle of all this noise here. So I'm going to look to see if we can now hold below the top part of this band, get back below and see how these levels do. If we get a move down to sort of 83.50s, and it holds there, that will show that this low is being protected by buyers. That's when we might get a bounce back up to 84.20s, and then we'll see if it stays within this sort of rough channel that we've got going on. I haven't drawn it in because it's a bit messy on the lines, but you get the idea that we've got a bit of a downtrend. So 83.50 is where I'm looking at to see if we get a bit of protection off the prior low. That might see us get a bounce back above 84s. If we fail and take out this low, then I expect to get down to the low 83s and maybe down to some of the multi-year low areas, and I'll be looking for longs off of that. One other one before I hand over to the K-Meister. Dollar CAD, which I got into yesterday in the end. I was looking to trade long down into the support around these points down here. I got into a small long, got stopped out not long after. So again, this 129 level is becoming a bit pivotal. I'm going to expect to see resistance coming in there again, but it's not really moving down lower, following oil, as we know, along the way. So it's a bit of in no man's land, a bit indecisive in my opinion what happens here. But stick to the numbers. If it does get it back above and holds 129, then we've got every chance of having a push on higher. Really below 128 is probably the marker down here. 127.90 should bring us further downside on that area there. And with that, I will hand over to K-Man for his round robin.
Thank you.
Where are we? Here we go. All yours, mate.
Okay. Here we go. All right. First, I want to show this one. Hang on a minute. Okay. First, I want to show this one, and because we are seeing a bit of the euro trying to find some firm footing, And this is the differential between the two, the Germany 2-year and the US 5-year. I know that some people are rather looking at EU rates, but I think that the German ones are still the most representative and the ones who are most looked at by the market, because if you want to look at the EU, then you take the whole Italian thing as well, and the Southern Europeans. They are a slightly different kettle of fish. This is more the pure one, and we can see here it's only a 1-hour chart, so this is not really a big break. But as a matter of fact, euro rates have been rising a little faster than the US rates even. So we are finding that back mainly on the euro process, as where the US yields are still pretty much supported as well. Euro dollar is rather sideline to bid on dips, we may call it like that, but through the process, euro is doing quite a bit better this morning. So moving over to this euro dollar, then we had after the failure breakdown back below 102.10ish around here, but we're holding. We tested the 101.20.30 again yesterday. In our room, we had a bit of a collective moment where people who were short cut their short positions down here, and then people who tried to pick it up went long down here, and it was a pretty happy trade around this 101.20.30, because we can also see this 101.10 here, which is a shorter term Fibonacci support. So that was a bit of a happy moment. I'm just a tiny bit short because I still don't believe in much in euro strength, but I'm far away from having a heavy position in it. I'll be looking at it rather closer to this 102.20, 20, 30, 40 zone, even up to 102.70. See what's happening there if the euro can make it back. But I think the strength, if any strength persists in euro, might be more coming from crosses than anything else. So one that I'm looking at is, of course, this is the big break. We're nowhere near, but is this euro cat still? I'm a tiny bit short, but I'm managing it very actively. So I'll be looking at this 40-60 zone today. Try to add a bit again to existing, and I'm not yet changing view on this one, but I do keep a close eye on the oils, because the both WTI and Brent have moved quite a bit lower overnight again. So we have to pay attention to what's happening in that sphere. But Macklem not having changed anything and seen my limited confidence in euro strength, I'll try to continue to watch that one. If ever it goes back below 130.30, we have a chance of moving lower again. But keeping a close eye on this and trade it according to the plan. Same thing on the euro mix. The dollar mix, since the rest of the yields, like especially euro and the US in tandem, and let's not forget sterling yields as well, have been gilt yields have been pumped up this morning in quite some fashion. I think let me quickly have a look. Yeah, that's it. The UK 10s have been moving up like 12, nearly 15 BPs this morning after the data. So all major yields are moving higher. So there's a little bit of pressure on the emerging market currencies, because the interest rate differentials coming down with them. But still, this is a very high yielder on the mix. We have to respect, though, if ever we come into test, and I've already mentioned that yesterday, respect this 75-77 zone on the dollar CAD. It could mean a hold for a move back above 20 possibly 2030s before reassessing. So be a bit careful on that one. If ever though we start to ramp below, then we are going to talk about this red line around 1950s. So pay attention to the yield differentials as usual, I would say. Same thing, we're seeing a little bit of a revival on the Euro Mex, but in the bigger scheme of things, this is not really a big move yet. I have a first little alert here around 2039, 2040. I'm trying to leg into a little of my shorts again, which I covered earlier, just to continue to play the plan, continue to see what's happening here. But really, I'm going to get nervous on this position if ever we start to get back above 2050, 760. This whole zone, basically, 2055, 2080, it's about 1% wide. But this zone, I would start to get a bit nervous on the overall position. For people following me, they know I've been in from around this zone, trading it around, getting in and out. It's done a lot of good so far, and I do think that when the dust settles down, there's still a bit of weight around Euro's neck, and MEX being such a high yielder. We might see this move down to the 2004 and why not 1960s ultimately. That's we will see how that develops. Sorry. I know a lot of you are watching the Norwegian kroner. First of all, the euro NOK, it's in a downward channel, but we're finding support on the tech levels. So we respect the 980 on the euro NOK, 979, 980, and who knows? There's probably with lower Brent, there's probably a fair enough reason to make it back up to around 10, but will it be viable? I'm not so sure. A lot of people are trading the dollar NOK as well, especially when the euro found its weak point around 103.5, and then on the way back down, some people were buying dollar NOK. Look at this 973, 974. It could be enough for this move. Went up slightly above there and then capped. So if we ever move though back into this channel, we may see a bit of a stretch for this one. So watch oils. Let oils be your guide, together with the dollar strength and the yield differentials. To the yen then, first of all, on the longer term, because we've been watching this with some sense of interest. Bank of Japan would say, or MOF would say, some sense of urgency, but some sense of interest. This cloud tried below, never closed below, held again the other day, and today it's well inside comfortably. The yen is weakening, and the top of the cloud comes in right at the prior low and prior spike high today. So that is around 135, 50, 60. If ever we would reach it, I suspect we find some decent offers up there. So keep an close eye on this 135, 50, 60. Back to the shorter term. This was a bit of a trend line, which was also noted by people in our room, which got broken. We moved up to the other one here, the minor one in between, and then back down to the retest of the trend line late yesterday or overnight. And since then, we are moving sharply back up again. This one is a bit close for comfort for me. It's around 134.60, although on a retest earlier today it held already, but perhaps a bit close. So I'd watch 2 points here, 134.40 again. although it's getting crossed often now, so this is watered down, but especially this one around 133.90 for inside range support. And then keep in mind the cloud I was talking about before. Really, for the focus that I'm having is really it for now. But I am keeping a keen eye on this channel in the Kiwi dollar. The bottom side comes in at around 62.90. So keep an eye on that one. We are about 20 points away. As Ryan said, the reaction after the rate decision was kind of as we expected. And also, I think the yields move in the rest of the major currencies, the dollar and the euro, have been taken the euro crosses higher this morning. Also, that has weighed on the Kiwi, but I would pay close attention to the 62.90 in the Kiwi here. On the Aussie dollar, we have a kind of similar situation, but with a different picture. We are about well, actually a couple of points away from this trend line here. It's a valid one. We have 3 points and so a retest could see a rebound. Break below that would put us back into a much more negative bias on in the short term. I think if you go below, we're talking back about levels around 69 figure 10. I'm going to have a look at the S&P as well. So we've had this 42.55 break the other day. People were looking at the 4300, which was triple top and everything, looking for breaks. But I would attract your attention to this one, this red line, which comes in around 43.40 today. Yesterday we had another level at 43.60. I would say this 43.40.60, since also we are in OPEX territory this week, and if we ever get a shot up to that to those levels, looking at the actual yield moves, I wouldn't mind trying a bit of a short, because it's also a low here, a low here, bit of a springboard here, but it comes back from the highs that we've printed earlier in the year. So I think this is a relatively important one. So I'll be judging this into the OPEX week and possibly into the end of month if we get some moves above. I'm starting to think that looking at the yields, that may be it for now, but also being a bit cautious right here and now. Also, I'm also bearing in mind that in September, the Fed's quantitative tightening is going to double, which will have a de facto tightening effect in the yields market and in the liquidity market, especially. So I'll be keeping a close eye on the S&P going into the next few days, into the next few sessions. That rounds it up for me, Mr. Ryan. I'm giving it back to you.
Thank you very much, mate. Let's grab that. Yeah, I just want to look quickly at Dolly Yen as well, just giving my own eyes picture. If you recall, just before I went away on holiday, probably for about a couple of weeks, I've been getting a little bit short-term bearish on this one. I didn't manage to actually get anything on at a level I would have liked to run some shorts massively, but we have had this flush out. So, you know, it's if anything, we've just eased the pressure off the top. You know, we've had a really strong run, you know, as you all know, particularly this move from, you know, the 114, huge move, very strong. And there's times when you need a bit of a refresh in a trend, and this is possibly it. So that's sort of taken a bit of my bearish pressure out, because we then got this move. It has in my mind, made things a little bit more balanced. I would expect perhaps we see some consolidation now, anywhere between these sort of 131s, maybe 136s, a bit of a sideways action going on, unless we get some big news, big data changes or anything like that. What that may do is give us some decent ranges to trade, and as we know with data particularly, we get in some decent moves on data numbers. So if we are going to start seeing a range building in this one here, I am looking more to fade big data price moves. If we get a really strong headline retail sales today, you know, maybe we rock up 60, 70 pips and you know, we have moved, you know, 80, 90 pips on data on this one. If we do get a move up towards, I've also got 135, 50, 60 in my shop window as well. Just where I can find it. Let's come into a shorter term chart. Might make it clearer. Let's go into an hourly. Oh, come on, mouse. So I've got a little bit of a zone here, sort of, I would call it 05, 20 if you like. Then I've got K's that he's saying about 135, 50, 60, just a prior S&R area there. So that's an area to look at as well. If we get a move up to there on the data and can't crack it, and particularly retail sales, as we mentioned, if the number is strong on the headline, but real retail sales adjusted are another negative, that's going to take potentially some steam out of any data positivity for the dollar. So I will be looking to trade this one on the data at least from here. But other than that, yeah, I think we've got the potential to range for a bit now, and this pair loves to go into a long consolidation phase after it's made a big move. I think we've had a bit of a shakeout in this move down from the highs, particularly late July. So we will probably find we've got a more balanced market. Again, just to echo what Kay was saying in the S&P, it looks like I'm heading for a stop out on this one. I did do a little short into 43 yesterday in this move here, very small short into this one. I had some buy stops in previously at 05 and 43.15, and I thought we were going to be running pretty as we broke above there and got above that 200 DMA, which is around about 43.13. But I missed my opportunity to take some off in this move to the highs. I was looking around about 25s and missed it. I didn't leave any pending orders in, unfortunately. I did have a stop at 80 on those longs, which I moved down about 20 minutes before the show, 10, 20 minutes before the show started, just because I've got this little bit of a support area, sort of 72 to 80. So I didn't want to have my stop right in the middle of that. So it may cost me 10 more pips, but just trading on it technically, I've got my long stop down here at 70, so just under this line here. See where we go. I don't like hoping. Hope isn't a trading strategy, but I want to see if we can get into the US session to see if maybe the baton gets picked up again, like we've seen most times in the US, where stocks tend to rally. That's my positioning for that one there. It does mean that we're potentially going to see resistance coming in at 43 once again. If I see that happening, if we get a move up to 43s and it holds, we don't get the break back above, that'll mean that this move here is a bit of a fake out, and I'll potentially try and throw my trade in for a smaller loss than my stop. But we shall see what happens then later in the session. If you guys and girls have any questions, do throw it up in the room there, in the chat, and we can get those answered there. If there's any pairs you want us to look at, or any questions at all that you want to look at. Other than that, we can cross that tomorrow. I don't have an awful lot otherwise I want to look at today. Everything seems pretty steady around the grounds. So yeah, well, I think we'll call that a session, and thank you very much for coming to the Flow Show, and we shall see you boys and girls tomorrow.
Thank you.